Okay, Goldman Sachs just dropped a big report on a major shift in India's economy. Let's break it down.
So India's on track to hit its 4.4% fiscal deficit target, but how they're doing it is the real story here. Because yeah, this kind of discipline comes with a trade-off, one that's going to shape your investment strategy. They're hitting that number by making some really sharp cuts to government spending on big projects.
And when I say sharp, I mean it. We're talking a 28% drop in government Capex, year on year. This slowdown hits some huge national projects. Think roads, railways, and urban development initiatives.
So, for investors, this whole thing creates some pretty clear winners and losers. You basically have two camps now, sectors facing major headwinds and those with some serious tailwinds. But hey, it's not all bad news. This fiscal tightening actually has a pretty significant upside.
You get less economic risk, stable bond yields, and lower borrowing costs. That's a great setup.
Okay, now for the other side of that coin, the immediate hit to company earnings. If your business relies on government contracts, you're absolutely going to feel the squeeze. This is a fundamental shift. The engine of India's growth is changing right before our eyes. All right, so what's the playbook? How do you actually navigate this massive shift?
Goldman says this is about a tactical portfolio review, not a complete panicked overhaul.
And you'll want to keep a close eye on these upcoming events. They're going to give us more clarity. So the big question you need to ask yourself is this: is your portfolio ready for what comes next?